Welcome to our channel. Today we're discussing news that shook the American financial markets. Target, one of the world's largest retail chains, announced earnings results that fell far short of expectations, leading to a sudden collapse in its share price of more than 20% in just hours. Imagine, billions of dollars evaporated from its market value in a matter of seconds. Is this just a temporary stumble, or the beginning of a real crisis threatening the entire retail sector? Stay tuned as we reveal all the details, analyses, and forecasts that every investor or stock market follower should know. Let's start with the shocking numbers. Target announced earnings per share of $1.85, while analysts were expecting $2.30. The difference is significant, and the more than 19% miss sent shockwaves through Wall Street. Revenues also fell short of expectations, $24.9 billion versus $25.2 billion. What's more, comparable store sales fell 4.2% compared to last year, a serious indicator of declining consumer confidence. These numbers weren't just a disappointment, they were a warning bell for investors who had grown accustomed to Target's stability in the U.S. market. What really happened? And why did Target surprise everyone with these results? First, operating costs rose to an unprecedented level. The company was forced to raise wages by 12% to keep up with the competitive labor market. Second, the supply chain crisis directly impacted shipping and transportation costs, which rose by 18%, squeezing profit margins. Third, inflation changed consumer behavior, making them more cautious in spending, especially on electronics and clothing. Fourth, fierce competition from Walmart and Amazon. Each of them puts tremendous pressure on Target, both in terms of pricing and the quality of digital services. All of these factors combined to form a perfect storm that led to this sudden collapse. The market reaction was swift and shocking. Target's stock plummeted from 161 to 128 in minutes, a massive loss of more than 20% in a single session. The company's market capitalization fell by more than $15 billion in just one day. It didn't stop at Target. Walmart shares fell 7%, Costco fell 5%, and even Amazon fell 3%. Wall Street analysts were divided. Some, like J.P. Morgan, downgraded the stock from buy to neutral, while others, like Morgan Stanley, considered the decline overdue and a potential buying opportunity for long-term investors. Can Target recover from this crisis? The company still has significant strengths. More than 1,900 strategically located stores, the Target Circle loyalty program with over 100 million active members, and massive investments in technology and express delivery services. Services like same-day delivery grew 35% this year, and private labels generate high profit margins. But the challenges are clear. Management announced a plan to save $2 billion over 2 years by improving operational efficiency. Will these steps be enough to restore investor confidence? Or are markets waiting for more from Target? What do these events mean for investors? For short-term speculators, the stock will remain highly volatile in the coming weeks until the next quarter's results are announced. For long-term investors, Target is a strong company with solid fundamentals, and this decline could be a golden opportunity to buy. Important advice: don't make rash decisions. Watch Target's upcoming results closely and focus on the company's e-commerce strategy. Diversification is always the key to successful investing. Don't put all your eggs in one basket. Today's Target collapse is an important lesson that financial markets are unforgiving, and companies that don't adapt pay a high price. However, history proves that strong companies can recover, and smart investors know how to capitalize on opportunities. Stay informed, analyze the data carefully, and don't let emotions drive your investment decisions. If you found this analysis helpful, don't forget to subscribe, activate the bell, and share the video with your friends who are interested in investing. Share your thoughts in the comments. Do you think Target will recover soon, or will the crisis continue? Thank you for following along, and we'll see you again for a new analysis from the world of finance and business.